Trading investors.
The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN, just past 9 a.m. Eastern Time Wednesday morning. We got about 24 minutes to go until the opening bell in markets. Quite a difference from yesterday's early action. Markets trending positive. We get the S&Ps up about 20 points right now, trading at 41.77. We're basically just erased the entire 60-point decline we had in the last 24 hours. You trade down to 41.20 in the S&Ps, and just like that, we're within a few points of 41.80 in that index. NASDAQ 100, not quite clawing back all the losses. NASDAQ, a little bit of weakness there, especially compared to some of the other indices as well. NASDAQ at 13,631. We're currently up 100 points in the NASDAQ 100. The Dow well above the highs we had yesterday. The Dow 34,126 right now, and the Russell up about 13 points. Crude, quite an acceleration. Crude. Are we on our way to $67? We may be. $66.46 right now in the crude market. You got the gold contract up $6 at $17.82. Silver's up a penny at $26.57. And notes and bonds right now, pretty flat action, 132.13 in the 10-year. We're talking about a yield in the 10-year of about 1.6% right now. And we'll jump over to the VIX, as we talked about. Quite the acceleration yesterday. In that VIX, 2185, 1836 right now in the volatility index. That's something you should keep your eye on. I mean, look at that little volatility spike. So much for the days of 15 or 16 in the VIX as we coming into the middle of April. Really? I mean, let's just zoom in on the action here. We get some wide acceleration really on these VIX bars yesterday, really spiking up to 2185. We're back to 1841 right now in the VIX. All right, let's jump into the fundamental news in the markets this morning. ADP private payrolls ahead of non-farm payrolls on Friday. We get 742,000 in April. Decent number, but below the estimate of 800,000. The prior month was 565,000. The market will be looking for just shy of 1 million jobs for the non-farm payroll number on Friday. In the ADP number, leisure and hospitality, the sector hurt most, led growth, but with 237,000 positions. The industry still about 3 million shy of where it was before the pandemic. Now, it's interesting, right? Leisure and hospitality, that's all the talk in terms of those are the jobs that have to come back and probably will come back the quickest, hopefully, probably. But that's only 3 million shy. That means there's 5 million shy that are still out there beyond leisure and hospitality that need to be made up. Trade, transportation, and utilities, also a major contributor, adding 155,000 new jobs. Professional and business services, 104,000. Education and health, 92,000, as students head back to in-school learning, as they put it. Services typically account for the bulk of the job growth. That was true again in April. The sector added 636,000 positions. Strong number. However, good producing industries, strong month as well, 106,000 in manufacturing, and saw 55,000 new hires. Construction up 41,000. Resources and mining grew by 10,000. Interesting here as well, getting into big companies and small companies. Companies with 500 or more employees led with 277,000. And then you go right to companies with under 50 employees, added 235,000. In the middle of that, between 50 and 500, 230,000. So pretty spaced out. Now, in March, to see how this is going to play into Friday's number, in March, you had ADP growing at 565, okay? And then you had the non-farm payroll number coming in at 780. So you were off about 215,000. Doesn't mean that that's going to play into this month. A lot of variables in play. But we have a number that we're looking for about 1 million jobs to be added in the non-farm payroll number on Friday, and we come in with about 742,000 for the ADP private payrolls number. Number out this morning, and we'll wait for Friday's number. We'll see how that comes out. Lots of expectations, rightfully so, to see how that number is delivered. All right, let's jump around to some of the stories we got going on this morning. We'll start it off with Lyft. Lyft out with their numbers last night, strong numbers. We got a couple stories going on with Lyft and Uber. So Lyft quarterly earnings. They report an adjusted loss before taxes, depreciation, EBITDA. $73 million is all they lost. Basically half of what the market was looking for, saying the market was looking for a loss of $143 million. Shares were positive last night. We'll pull up Lyft. Uber was positive as well. Revenue declined $36 million to $609 million from a year earlier before Lyft felt the brunt of the pandemic, but up 7% from the previous quarter. Analysts were looking for $557. We had an extremely strong quarter. We're going to emerge from the other side of this pandemic stronger, leaner, more profitable. That's the co-founder and president, John Zimmer. And here we go. Here's the line I want to get to. On a call with investors Tuesday, so conference call, Lyft executives said airport rides were up 65% in April compared to January numbers, influenced by the CDC and relaxing travel warnings, vaccinations ramping up, of course, playing into that. Strong numbers when you look at where they come from. We'll jump over to these two charts in a moment. We'll jump back to that article because they got some cool graphics in terms of what's going on. I mean, these companies could be a nice bellwether in terms of what's going on, especially for travel. Now, there's the acceleration on Lyft earnings. You accelerate from about 56 up to 60. Now, this morning, I'm going to touch on, we got a couple things going on because that's not the one I wanted. All right, I'll tell you what, I'll pull it up. It's going to be on the news section. And here is your headline. Labor officials said department not issuing new regulations for contractors. The Biden administration is going to block a Trump-era rule that would have made it easier to classify gig workers, others, as independent contractors. So that news out this morning at about 8:45, and you're going to see the volatility. There's your volatility on 8:45 diving lower on that potential news. Lyft still up about $1.75. We'll jump over to Uber shares. Uber trading higher on the Lyft news. It would make sense, right? You're seeing rides ramp up. Now, Uber has a lot more international exposure than Lyft. It's going to take a little bit more time, to put it lightly, for Uber to get back to full business when you think about the international exposure and how COVID is still persisting in some areas. But Uber trades higher to about 55, and there's your volatility on the potential gig worker classification news. Uber pulling back from about 55, was sitting at 54. Uber still up about $1 as well on their earnings. And you know what? We'll touch on this a little bit. Since we're doing the Uber and the Lyft, why not? Article out here yesterday, Mercury News, not familiar with the writer as well, but some of the things they touch on are interesting. When you talk about, there's a lot of press going on. We had the Labor Secretary, Marty Walsh, out there recently saying that he would potentially like to see those workers classified as employees. This has already played out in California. So you have Biden campaigning, as they said, to try and give legal protections to gig workers. In Congress, you have Democratic lawmakers pushing a union-supported labor bill, the PRO Act, in part modeled after a California law called AB 5 that reclassified most gig workers as employees. Now, the kicker here is that AB 5 in California no longer a law, as they went to the constituents there. Now, Uber, Lyft, DoorDash, Instacart, there's plenty of companies out there contributing. $205 million is all it took, because, man, that is not a lot of money when you think about the California business that they have. They put it to vote. California, one of the most liberal states in the whole union, decided that, no, we want to classify those workers as contractors. You're going to see this play out, maybe potentially state by state. The looming fight over the status of gig workers comes amid a wider debate over big list business regulations. We'll see how those two ride-hailing companies open today, and we got a lot more to talk about. Stay tuned, folks. We'll come back with Kevin Hinks of Fast Market on the TD Ameritrade Network.
Ratios give shape to everything in our world, represented in the Fibonacci sequence. These special numbers define the patterns that make up our universe. Not even markets can escape the omnipotence of these ratios. Larry Pesavento is a 45-year market veteran who has published nearly a dozen books on the powerful patterns we find in nature and their relationships with the ever-elusive markets. Larry's newsletter, Fibonacci 24/7, will teach you to harness the power of these natural golden ratios in order to create successful trades. Fibonacci 24/7 is designed to teach the tools you need to identify and act on these undeniable and reoccurring patterns. Sign up for Larry's newsletter, Fibonacci 24/7, and you will also receive free access to his trading webinar, Trading Strong Trending Markets. Try out Larry's newsletter risk-free. All of TFNN's newsletters come with a 30-day money-back guarantee. TFNN, educating investors.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today.
Hey there, I'm Andy Arbertine with Tiger Precious Metals and Stones. Whether you're looking to buy and sell precious metals or trying to find the perfect diamond ring, I'm here to help. I have over 15 years of experience with diamonds and precious metals. You can call me directly at 727-329-8245, and I'll personally answer any questions you have and help you find exactly what you're looking for. I will be your personal concierge in the metal and stone business. Give me a call today, 727-329-8245.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
Welcome back, folks. We got the S&P's up 19 points right now. We got about 12 minutes to go until the opening bell. We're still in earnings season. GM, look at GM accelerating up about $2 this morning on their earnings. Let's jump over to our man Kevin Hinks. Every trading day, folks, Fast Market by the TD Ameritrade Network. 11 a.m. Eastern Time, Kevin Hinks, Alex Coffey, and the team, they're breaking down the market action. They're going over hypothetical option trades, showing you risk-reward, showing you applied volatility, everything you know to walk you through those hypothetical trades, trade management, etc. Tune in every trading day. Great time to check it out, folks. Kevin Hinks, good morning.
Good morning, Tommy O'Brien. Now, look at General Motors this morning. Up a little over, about $2.30 pre-market, $2.25. That's on missed revenues, right? So that shows you how fickle and how interesting earnings season really is, because no one that's missing on revenue, it has stock rallying in this environment, right? Missing revenue expectations, but General Motors guided. They've got problems with chips. They've got all these issues going on, and still the stock rallies. That is amazing. When I look at the entirety of earnings season and what General Motors just put out, and the stock manages to rally. What an incredible. This is why you got to trade risk defined. This is why you got to be prepared for movement in either direction, Tommy.
Got to be a struggle, man, for those GM bears out there going into that. And you get a number like that, Kevin, like you're talking about, because last week it was the exact opposite with the tech companies, man, beaten by $10 billion, et cetera, on the revenue line in 90 days and actually trade lower by the end of the session. And yeah, GM, they're up more than $2 right now, from $55.34 to $57.61. They reaffirmed some of those earnings expectations for the year, as you're talking about, Kevin. And it didn't seem like some of their talk in terms of that chip shortage going to impact them? They might have to, I think I saw the headline, maybe pause production, something like that. But in terms of some of those other car companies, was it Ford or whatnot, talking about potentially $2 billion hit? Maybe the market a little bit less worried. Those car companies, expectations a little bit lower than some of those tech companies. It's all about expectations, Kevin, right? You've talked about it. What's the market thinking? Man, expectations for some of those tech companies last week through the moon. And this week, a little bit different, as we're seeing with GM actually trading higher. And then we got the ADP number, Kevin, out this morning. We got some negative action yesterday in the market. Tech stocks really selling off. We got the ADP number this morning, a little bit light from what the market might have been looking for, but a strong number, kind of a broad number, too, across a lot of different industries. And then, of course, we get the non-farm payroll number coming out on Friday. We got some earnings going on of all the variables we got looking at, Kevin. What are you guys going to be talking about on the program coming up at 11 o'clock today?
Well, today we've got three great companies to talk about in terms of earnings. We'll do PayPal. Like Folio, will do a presentation on Etsy, and then we'll trade Uber in the third segment today. So we've got a great show today talking about some big names. And with Square coming out later in the week, PayPal and Square should probably trade in unison. We'll cover both of them during the week, but today is PayPal, Etsy, and Uber, Tommy.
Nice. And I got the Thinkorswim platform out here. So we got PayPal earnings. We're looking at the one-day expected move, $12.66, Kevin, right now. So you're looking at about a 5% move, and pretty cool how some of these companies do move in step. We had Lyft earnings, of course, last night. Some pretty strong earnings for Lyft. I talked about at the beginning of the program. You got them up this morning. We have Uber, a little bit positive on the Lyft earnings as well. But interesting, though, I saw there's always news potentially with the workers. You got classified whether as a gig worker, whether as a contractor, whether as an employee. It'll be interesting to see how these shake out, because even this morning in the last 45 minutes, Kevin, you have both of these stocks a little volatility to the downside, as it looks like maybe the Biden administration might hold off on one of those Trump-era rules or regulations. Haven't read through it, but pulling back a bit potentially on maybe a little bit tougher classification on the contractor front on those. But two big stocks. I mean, the news that hit me on Lyft, Kevin, was the fact that I think they said something like 65% they're seeing rides up just from January. Now, Lyft really focused on North America versus Uber with the international exposure. But we'll see how that plays out. And Uber, jumping over the Analyze tab, you're talking about $3.50 for only a $53 stock. I'll be listening to that third segment. And then Etsy, man. Etsy's been on fire. They're talking about, how about a $16.29 move, Kevin, in that one-day expected move. And we've talked about it before, but we're always getting new listeners. And I've asked you to explain it before. But, folks, the Thinkorswim platform, the amount of information that you can gain in at your fingertips, the one-day expected move, talking about implied volatility. Could you just walk listeners through again, Kevin, that move and what generates that type of information on the Thinkorswim platform when you're looking at earnings?
Yeah, the market maker move, the yellow digits that show up right at the top middle of the Thinkorswim platform, is a number that is generated automatically whenever the implied volatility in the front expiration exceeds the implied volatility in the second expiration. And it denotes or signifies an event on the horizon. And today's earnings event in Etsy has caused their front month implied vol to go to 134%, thus generating that number. And it is a calculated number based on the at-the-money straddle, a percentage of the out-of-the-money straddle or strangle, and that generates. But it's really a number generated automatically. You can't pull it up anywhere when that front month expiration goes above the second expiration, Tommy, and it's in big yellow numbers right in the middle of the page on top, and it denotes a one-day event. So the event for the week, the movement for the week expected in Etsy is $18.43. That's for the rest of the week, but the one-day expected move is $16.29, and that number, as you know, Tommy, moves throughout the day as implied volatility moves.
Folks, I asked Kevin to explain it on numerous occasions because I just think it's such an awesome feature of the Thinkorswim platform. I mean, if you're trading options in any capacity, and if you're trading them already, I hope you know this, you better understand the implied volatility priced into the options that you're trading. because, man, some of these moves, I mean, Etsy, that's about a 9% move, Kevin, that this market is pricing in either direction. Just pulling up the May 7th options on the Thinkorswim platform as you're talking about right now, at the money, you're looking at almost $9, man, that you got to get a movement if you're just buying puts or buying calls just to break even. Some big movements, but that equity has seen some volatility recently in both directions, and it'll be interesting to see what happens. We're down from 251, which we climbed up on their last earnings at that level, and we've been chopping around basically quite a range from about 180 to 240 in Etsy. I personally got my first Etsy purchase back in February, a little Super Bowl outfit for little Tommy O'Brien the Fourth, my first purchase, but that thing's been on fire. But we're talking about right now, talk about on fire. They have a lot to live up to. The fundamental tab, and folks, the Thinkorswim platform, I know they're a sponsor. I'm biased, but it is phenomenal, the type of information. You jump over to the fundamental tab, you got everything right in front of you. We're talking about a company right now, Etsy, $24 billion it is valued at, and we'll see as they come out with their earnings tonight. Kevin, man, I look forward to the program as always. Thank you so much for the education. We'll be tuning in at 11 o'clock for all the action.
Thanks for having me on, Tommy. Always a pleasure.
My pleasure, man, as well. Stay tuned, folks. We'll come back after the break for the opening bell. We got S&Ps up by 19 right now. We got the NASDAQ 100 up by 94. We got the Dow. Look at that Dow. We're going to make a record on the Dow on the open. We just made 34,126 right now on the Dow futures. Looking for a record on the open within about 20 points. Stay tuned, folks. We'll be right back to the opening bell.
Hi, folks. This is Tom O'Brien. The printing presses are working 24 hours a day, 7 days a week. The U.S. deficit has risen 200% in 1 year with no end in sight. The markets are looking for an additional stimulus bill to get us through this once-in-a-generation pandemic. There is no free lunch, folks. The more stimulus dollars put into the marketplace, the less your dollar is worth each and every day. This is the time to protect yourself with a portion of your portfolio in the metal market. The Gold Report comes out each Monday morning. I bisect and dissect the dollar, silver, gold, the XAU, and the HUI. The Gold Report is a long-term hedge against the dilution of your buying power. The U.S. has put more than $6 trillion into the marketplace in the last 6 months, with more expected in the next few months. The market did and does need the stimulus, but it will have long-term implications on our buying power. The Gold Report comes with a 30-day money-back guarantee. Go to TFNN.com and order the Gold Report now. Protect your buying power. Order the Gold Report now.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den trading room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We got markets open, and we got markets right where we were coming into the open. S&P's up about 18 points. You get the Dow up 76, backing off a bit. See that acceleration? The highs, just near those highs we're talking about. Let's pull it back a little bit. 34,144, within about 50 points to that level in the Dow right now. Let's jump around to some of the stocks with earnings this morning. As we talked about, GM shares up about 3% right now. We'll jump to Lyft shares, pulling back from their gains, up about 1.3%. I told you kind of two stories going on with Lyft and Uber this morning. Uber giving back some of those gains, but still up about 1.6% as well. And let's jump around to some of the stocks. GM, we're going to start it off with their earnings, just digging into some of the numbers, as Kevin was talking about, actually missed on revenue, especially this earnings season, missing on revenue and trading higher, but it's all about what the future is going to be. And the future for these car companies a little bit dicey coming into earnings, and GM beats expectations in terms of where they'll be guiding, reaffirmed its earnings expectations for the year, guiding toward the high end of the range. They expect a strong first half of the year despite the semiconductor chip shortage that has caused factory closures. That was a big risk, I imagine, priced into these earnings coming in. And the fact the market heard that, probably easing some of those concerns, allowing GM to trade a bit higher. Earnings, $2.25 versus $1.04. Big numbers, but as Kevin mentioned, they missed by $200 million in the quarter. 32.47 versus 32.67. Reaffirmed the earnings expectations. They're big numbers. The company forecasts 10 to 11 billion in adjusted pre-tax profits. I mean, that's huge. An adjusted automotive free cash flow of 1 to 2 billion for the year. The forecast factored in the potential impact of chip shortages, including a hit of 1.5 to 2 billion in earnings and a decrease of 1.5 to 2.5 in free cash flow. The CEO, Mary Barra, said the company will have production downtime. That was the term. Production downtime in the second quarter. Expects to have a strong first half of about 5.5 billion in pre-tax and adjusted earnings. GM shares up a bit on that news. GM holding on to those gains, up about 3.5%. Lyft, as we talked about, shows more signs of pandemic recovery. Revenue up 7%. Talked about this briefly at the top of the show. Revenue per active rider, slightly above. This is a big number we're always looking at, right? In these ride-hailing companies, how many riders you got? 13.5 million versus 12.8. That's a nice beat there. Revenue a beat as well. They lost much less than the market was imagining. And as we talked about in the beginning of the program, it also talks about guidance. Lyft issued guidance for the second quarter, telling investors it expects revenue of 680 to 700 million. That's a 12 to 15% increase quarter over quarter. Now, that's a much more noteworthy comparison than year over year, because they're just not worthwhile, folks. Year over year comps in this market, not even worthwhile to even just pay attention to. Because look at the 12 to 15% quarter over quarter will represent a growth of between 100 and 106% year over year. That's because the comps are a joke, folks, a year ago. With a resurgence in users, the company is facing a growing need for more drivers. That might be a theme here, making sure that as things really come back, that they have enough drivers to take care of that demand. Yeah, I mean, you have competitor Uber, for example, saying just last month they're going to spend $250 million on a one-time stimulus aimed at getting drivers back on the road. It's huge. And they saw some big increases in terms of the numbers that they were seeing for rides from airports, et cetera, April versus where we were in January. But Lyft shares pairing some of those gains, as we talked about, having to do with potential their workers. Look at that. Talk about tough times to be coming out with earnings. Lyft down 1.3%, continuing to drop 55.39. Let's see how Uber's trading on that. Still up 0.5%, but giving back some of those gains as well. All right, let's jump to some of the other stocks with earnings this morning. We covered GM, we covered Lyft. Match Group out with their numbers, strong numbers, 6.2%. They're trading higher. We'll see how they're continuing. They beat estimates of 17 cents a share by earning 57 cents a share. They have Tinder. They have Match. I mean, they got a bunch of different brands of online dating. The operator of Tinder and other dating services also reported revenue above forecast. Strong current quarter guidance as it anticipates a surge in dating demand as the pandemic recedes. MTCH is their symbol. Continuing the trend on the open, up 7.6% right now. You put this thing on a daily, it made it as high as 174.68, right in the middle, basically, of this consolidation area, really between about 130 and 160. Got above there for a few days back in the middle of February, 150 from Match Group, and really, you back it up to a 3-year weekly, right? Man, we were down to $40 and change, $44 and change at the lows of COVID. Hilton Worldwide, Hilton out with their numbers. They earned 2 cents a share, missing the estimate of 8 cents a share. Revenue below analyst projections, continue to be hit by the pandemic. Although it said 97% of its hotels were opened by the end of April. Congratulations on opening the doors, but have you got any customers in there? That's a big one. I would imagine many hotels are open at this point as we look for the resurgence. Hilton, whoops, let's put that, that's a little bit of a weird chart we got going on. What are all those lines for? Hilton, nonetheless, down about 0.9% on their numbers on a little bit of a miss. Scott's Miracle Group, so the maker of lawn and garden products. So shares gain in the pre-market, beating estimates top and bottom line, continues to benefit from a surge in consumer demand as homeowners continue to focus on home projects amid the pandemic. This is an interesting one when you think about how is the trend going to persist for some of these companies like a Scott's Miracle Grow, where everybody was sprucing up the home, where we're trapped in our houses during COVID. You have this stock trade from a price level of $80 for the COVID lows. You were trading at about $120 coming into COVID. We've doubled that price. We're trading at $234 right now. We're as high as $254. I imagine that trend continues, folks. We're spending a lot more time at home. People are going to be working at home in some capacity, a lot more than they were prior to COVID. You're going to want a nice lawn when you're working at home, looking out that window every single day. Scott's Miracle up about 3.5% on their numbers. Activision Blizzard, the video game maker, beat estimates by 14 cents a share at 84 cents. Revenue exceeded forecast. They raised the full-year forecast as demand remains elevated for games like Call of Duty and Candy Crush. Candy Crush, I haven't played that game in years. I was playing that at one point. Activision, trading higher on that news. Let's see if they're holding on to the gains. They sure are, up about 5.4% on their numbers. There's a pop for you from $86 to $94 last night. We're holding on to those gains at $93.48. Caesars, let's talk a little gambling. Let's talk a little Vegas. Caesars, up. Well, let's see how they're trading first before. You never really know, folks, until we see the open. And continuing to climb. Caesars up almost 10%. Some of these gaming stocks, folks, you want to see an opportunity. How about $6 for some Caesar shares? And think about, folks, there was some time and the world was a lot different place back in March, as in the fears of this economy, right? We didn't know about the stimulus. We didn't know about the vaccines. Caesars was trading at $6. We're trading at $103 today. High-risk wagers buying into a market that just tanked from $70 to $6, potentially bankrupt, potentially right around the corner. But Caesars, strong numbers, and I imagine it's going to continue, folks. Vegas is going to be partying for a good year or two coming out of this pandemic. Caesars up about 9.4%, continuing to climb on their numbers. Let's jump around to some of those other gaming stocks. We'll pull up Penn. Penn trading higher on that, up about 3.6%, probably continuing to accelerate. I mean, this equity, Barstool Sports, how about from $3 to $142? But guess what, folks? We just gave back $50 in that price. Man, the moves in some of these equities. Stay tuned, folks. We come back right after the break.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. We got markets right now. You're looking at an S&P positive by 11 points, giving back some of the gains that we had on the opening bell right now. Taking a look at a 15-minute bar. Let's just make it down to a minute. I like zooming in on things sometimes when it's really accelerating. A little bit of a sell-off on the opening bell. 41.78 down to 41.67, bouncing a bit. We'll jump over to, where am I? There we go. Whoops, excuse me. And there we go. NASDAQ 100, 85 points in the positive. The Dow giving back some of the gains, actually. That's a little sell-off there on the Dow. 34,120 down to 34,020, up a bit, 34,060 right now on the Dow futures. Let's jump back to some of the stories we're looking at this morning. Wanted to touch on Dogecoin. So quite the story going on here on Dogecoin. The headline out there, Dogecoin a joke turning serious in latest crypto binge. Folks, this is quite a staggering number here. We're talking about $90 billion. $90 billion on Dogecoin, folks. Be careful, all right? I imagine that Dogecoin, I got here, folks. You want to see a price quote of Dogecoin? I pulled up the Robinhood platform. They allow trading. This is a one-month chart of Dogecoin. You want to talk about currencies, and we're going to be talking to our man Teddy Kegstad right now. It's a nice segue. I don't think we're going to be talking Dogecoin because I wouldn't be putting my cashola in Dogecoin right now, but 66 cents. Folks, even a week ago, you were at 30 cents. A month ago, you were trading, my goodness, at 6 pennies. 5 pennies? Yeah, 6 pennies in April. Watch out, folks. $90 billion. Dogecoin ain't going to be worth $100 billion, folks, in the future. It's just not. Mark my words. All right, let's jump over to our man, Teddy Kegstad. Folks, every trading day you can reach Teddy, see the work he does at his website, forex-trading-unlock.com. We talk to Teddy every week, every Wednesday at 40 past the hour. Teddy Kegstad, good morning, man.
How you doing? I agree with you. Dogecoin is also it's like the tulip bulb.
You don't got your billion stashed away in Doge, Teddy?
No. I know, and everyone keeps telling me how stupid I am, but you know what? I just don't think it's going to end well. So
listen, Bitcoin's another story, man. Bitcoin ain't going anywhere, right? But Dogecoin, man, nobody's going to be paying, bills and so forth. I don't think Fortune 500 companies are going to be putting Dogecoin on their balance sheet anytime soon.
No.
All right, so speaking of real currencies in the market, interesting week of some action here. Of course, we got some payrolls coming out. We had some speak from Yellen yesterday, throwing a little bit of fire on the market. What are we looking at in currencies this week, Teddy?
Well, I think the big number to watch this week is the unemployment number. So that, I think, is going to set the tone for the next few weeks as we head into the month of May. So we had a nice little bounce in the dollar on Friday, confirmed with the little follow-through, which is expected with the way the dollar's been beaten up over the past couple of weeks, So, but I think what we have right now is a lot of kind of neutral trading going on. Like, for instance, when you look at Australian dollar, for instance, it's an arranged trade, So there's a lot of events right now that we're kind of keying off of to watch. I mean, we have oil accelerating once again to the upside. Oof. So we know that hits your favorite currency, the Japanese yen. We're looking for a breakout there. In fact, right now I have the yen targeting 110.70, especially with oil continuing to make higher move highs. If we start to see oil get above 68, 69 bucks a barrel, which it very easily could do over the next couple days, then I think you're going to see a spike in the U.S. dollar yen. And then we have the free falling U.S. dollar Canada, where those bears just continue to grind lower. And that's another currency where I don't think you can fade that trend, but we have a mixed bag of goods waiting on the unemployment number. I think that's really going to really give us clarity on what's going on moving forward.
That U.S. dollar Canadian, could you just walk me through, just as a consumer in U.S., right? We're always used to that kind of U.S. dollar, Canadian dollar conversion rate that's kind of on some of our products, right? Man, that is quite a move that we have. Even yesterday, no, that's a weekly I got. Okay, I got a weekly on my chart right now. Last week was just a bonkers move down from 126 almost to 122. But what kind of influences really are driving that type of action there between the U.S. dollar Canada to have such a trend persisting for so long?
Well, I think the number one trend, this thing that's driving it, is oil. We also have a mixed political climate between the U.S. and Canada right now. They're one of our strongest allies, but economically we have a little bit of a tit for tat going on with them. So they're stabilized now between, we're post-Brexit, all that stuff is all hashed out.
Sure.
But I really think that it's the commodity-driven trade that's really strengthening the Canada versus the dollar. And the fact that we don't have a favorable economic environment. The trade between U.S. and Canada is somewhat restrictive over the past 6 months, and especially over the past couple months. And I think as long as that environment persists, there's really no reason to see dollar strength coming in against the Canada. Now if we were to have, say, a tremendous sell-off in the bond market and all of a sudden a sell-off in oil, I could see us having a turnaround for the U.S. dollar Canada. But right now, this is a trend that, it's been going on for over a year, kind of like the Australian dollar, U.S. dollar trend as well. But the U.S. dollar Canada trend is much more honed in because it's more closer to home. Yeah. And I think that especially as long as our economy starts to come back, and as their economy comes back, that might start to ease some of the tensions politically with us and maybe get things kind of evened out. But our administration doesn't seem too fixed on Canada right now. And unless they really want to regain the, I would say, the copacetic relationship that we had before, there's no real reason to see any strength in the dollar versus the Canada. And we're looking at a point now, like when I said initially how the dollar index had a nice little turnaround buy signal on Friday. That's the overall currency basket. We have divergence now with where no matter what happens, we can have strength in the dollar where the euro gets pounded and, the yen the U.S. dollar yen rallies and the U.S. dollar Swiss rallies. It doesn't mean the U.S. dollar is going to gain strength against the Canadian dollar, unless there would be, like I said, a major sell-off in oil. So I think that for trend traders, that trend still exists. That's a sell rally forecast for a while yet. Whereas where you're looking at Australian dollar, especially, that's a very neutral trade. Range traders, I think, are going to have a lot of fun with that market over the next couple months. So especially because China is a link to Australia as well, as we have certain issues with China that need to be hashed out. If our economy is showing signs of an uptick, but we don't have all kinds of orders coming in that are going to justify these things. So we won't know that until another 3 to 6 months. And if that continues to go on a steady stream, that may change things. But if we start to fall back into any type of choppiness when it comes to supply issues, I heard you earlier talking about the microchip issue. There's a lot of little tiny supply chain things. Remember the pandemic showed us how weak we were with medical supplies and how that was an issue with America. Now we're seeing the ramifications of how our supply chains are really integrated in so many other businesses. And if they don't come online properly, the more they get delayed, you're going to have stagnation with our economy, So it's going to be really choppy. I think it's really going to be choppy with some of your major currencies moving forward right now. And unemployment is really what we have to look at. You have to look at the major bond numbers to see if we can get something to stimulate the currencies.
Well, we're going to get some action on Friday, man, with those non-farm payroll numbers, the unemployment. Teddy, man, thanks so much for the education. We look forward to talking to you next Wednesday.
Thanks, guys.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical. Not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Markets can rise and fall like the tides. Subscribe to Basil Chapman's newsletter, The Opening Call, and you too can ride the wave. Basil Chapman is an authority in technical analysis. His Chapman Wave trading system has been helping traders identify trends and capitalize on momentum in the markets since 1984. TFNN invites you to test Basil's proprietary Chapman Wave trading methodology with a monthly subscription to the Opening Call newsletter for only $149. Your subscription to the Opening Call comes with a 30-day money-back guarantee, as well as daily market updates on key indexes, stocks, and commodities. Ride the wave. Sign up for the Opening Call risk-free today.
Introducing Primal Edge.
Today, it's even more important to take a supplement that complements your health. Primal Edge is specifically formulated to boost your immune system and help with weight loss, better sleep, stress reduction, and the need to detox.
Our early ancestors found all their nutritional requirements in the wild environment. But today, our food sources don't contain the vitamins, minerals, and nutrients that we need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated humic and fulvic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, without them, life cannot exist.
That's right, Ellen. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge. Just $89 exclusively at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We got markets in positive territory. S&P's up about 13, pretty much where we started off the whole trading day in terms of the opening bell right now. Jumping around to earnings events in terms of what we have happening tonight. So Wednesday, we're going to get after the market. Let's see, we got Uber, I believe. Let me jump around to Uber. Uber shares, love the Analyze tab on the Thinkorswim platform. You jump over to the Earnings tab. Yes, it is Uber out with their numbers tonight after the bell. We get Zynga earnings. We got Weight Watchers, WW, out with their numbers tomorrow. We get Blue Apron. We got Moderna early. We get Penn. We talked about gaming stops, right? Let's see Penn. What kind of price we got action there? You're talking about a $91 equity, $5.60 move priced into their earnings. We talked about Uber with their numbers coming up, $3.46 move expected for them. We get Zynga after the bell tonight. Zynga, $10 stock. You're talking about almost a 78-cent move expected for their earnings. Weight Watchers, WW, $26 stock. How about this one? $3.22. They'll be looking for that, some volatility. We were just up to $37. You jump over to the Analyze tab. We'll jump over to the option chain. And as you're talking about, I mean, it's a big move, folks. You look at the money, $26.59. Talking about $1.50, give or take, on both sides of that market. A little bit of volatility on Weight Watchers. Now you jump to the last time. Look at the acceleration the last time they had earnings, folks. To the moon. But guess what? We come right back and give it all back. Last time they had earnings, you were sitting right where we were now. You trade from 26 to 37. We give it all back. We're sitting at $26 quarterly earnings tonight for WW. All right, what else we got going on as we wrap up the program? Interesting action yesterday from the Treasury Secretary, Janet Yellen. Talk about potentially all this stimulus. Potentially, it's heating up the economy with inflation. Said she was not predicting or recommending rate hikes. Folks, she is the former Fed chairwoman. Of course, she understands the words of the Treasury Secretary and how they may be interpreted. Out there doing a little damage control yesterday. But what's interesting here is the horizon we have for the Fed. So a nice article from Bloomberg out this morning talking about potentially the uncertainty for inflation-wary investors as you have the potential. Whether you have Jerome Powell, Vice Chair Clarida, Quarles could all potentially be replaced in the coming year, depending on President Joe Biden and how he reshapes that. Powell could be back as well. But it's going to be interesting, folks. Thanks so much for tuning in. Stay tuned. Basil Chapman.